Hey guys, James here with Waterford Business Solutions. And last Monday we passed a pretty important deadline for the year, at least in the accounting world, where business tax returns were due or their extensions were due. That's for 1120S's or 1065, so S Corps or partnerships and multi-member LLCs. We still have about 3 weeks until Schedule C's, single member LLCs, disregarded entities, and corporation returns are due. But when it comes to tax returns, a big factor in a lot of tax returns is depreciation. And there's a lot of different forms of depreciation. You've got your standard depreciation that, depending on the assets you have, depending on their weight, depending on a lot of different factors there, depends on how long they may depreciate over, et cetera, et cetera. We can do a whole video on that if that's something that could be of interest. There's a lot of information that goes on the back end there, but you also have 179 and special or bonus depreciation. And that last one there, special and bonus depreciation, has become a huge factor in everything here this year, because when the One Big Beautiful Bill Act got passed last year, it re-upped the bonus depreciation and made it back to 100%. So it's something a lot of clients have been talking with us about, asking us about, and a lot of accountants have been talking about to their clients. But at the end of the day, we can talk about and we can mention it all day long. But what is it? Why is your accountant suggesting it? And more importantly, should you take it? And that's what we wanted to cover exactly this week. If you need more information there or find these videos useful, I do invite you to go ahead and like and subscribe to our channel here on YouTube. Turn on that bell notification icon. We put out videos every single week to help with accounting, taxes, integration, anything and everything that really revolves around understanding and managing your money. So go ahead and smash that like icon, turn on notifications, and follow us so that you can stay updated on everything that we're putting out here. Now, when we look at bonus depreciation, as I said, it got re-upped. As of last year, we were actually in a phase-out period where it was slowly dwindling down and reducing what was allowed there. And technically this year, until the One Big Beautiful Bill came out, it was supposed to only be a 40% deduction. Now, that got changed, and any asset purchased after January 19th of 2025 was re-upped to 100% on that. So definitely a nice little bonus. But let's kind of define things a little bit here. First, it kind of depends on the asset. There is a lot of assets that can be claimed under this. Machinery, equipment, tools, computers, improvements on non-residential property. That's an important part there. It can't be residential property. It's got to be non-residential property. Vehicles can fall under here. Even when buying a building, if you're a commercial landlord or a commercial renter, you can go ahead and use that to fully depreciate that building. Now, not the land, but again, that's going to be a different discussion to get into so that we don't complicate things. But you can use anything bought after January 19th and do a 100% write-off in 2025 on your tax returns. This can be great for businesses that had a huge windfall of income and they might have had a really great year, need to get rid of a lot of income, need to write off a lot of things here. It's a really great feature, and unlike Section 179 depreciation, it applies to a wide breadth of things, where 179 is fairly specific on machinery, equipment, and vehicles, and they have to be over 6,000 pounds. Bonus and special depreciation, there's not really weight limits related here. There's not it's got to be equipment, it's got to be machinery. It's a fairly open use here compared to 179, which is why it is a fairly popular deduction to take nowadays. And because you can get that 100% write-off, as long as you purchased it by December 31st or between at least January 14th and, January 19th and December 31st, you can get that 100% write-off there. So it's great in those features. A lot of accountants might suggest it if your business saw massive growth or if you're looking at a personal huge tax bill or something like that. But it's important to understand there are some drawbacks to bonus and special depreciation too. First and foremost, once it's depreciated, it's gone. If you buy a $100,000 vehicle today, December 31st, and you depreciate it on your 2025 taxes, you've got no depreciation left for your 2026 taxes. So what I like to do with clients is, instead of just taking care of and looking at the here and now, here's the quick benefit for you, what's the long-term outlook that we can see for a client here? What's the long-term situation that a client's going to be in? Yes, you might have had a huge windfall of money this year. Is that because of an unexpected boost that you had? Or is that because your business has seriously grown that much and may grow even more in 2026 and thus have even more tax bill in 2026? Because at that point, we could take that special depreciation this year, save you the money this year, but if we don't have that next year, you've got to go and buy another asset. Sure, if you need an asset, cool, that's fine. But if you're buying an asset to buy an asset just to depreciate it, is that really a smart business move? And that gets into business planning and asset acquisition planning. So before we look at special depreciation, we want to look at the 3 to 5 year plans for the business, where we think the income is going to go for the business over 3 to 5 years, and the asset acquisition needs over those 3 to 5 years, because we can take that depreciation now, but if we've got growth plans in place and we aren't going to per se need assets, or even if we need assets, is it best to take that deduction now, or could we lower a tax bracket next year by just taking standard depreciation this year? So we want to look a little bit closer into all of this. The next step that you have to worry about with special and bonus depreciation is going to come down to looking at your long-term plans with that asset, going back to that asset acquisition plan. What are the long-term plans with that asset? Are you keeping it for 3 years, 5 years, 10 years, 15 years? Because once something's depreciated, when you go to sell it, you've got to claim whatever proceeds you sold it at back as income to the company. So if we special depreciate it this year and you're selling it next year or 2 years from now or 3 years from now, we're looking at just deferring taxation on that money. And that could be fine. If we've got a huge windfall of money this year, that could be great. But if we're in a business growth mode and we're going to have even more money in 3 years, and we're deferring tax revenue for 3 years when you're going to have more money and you're going to be taxed even higher, is that the best idea there? So that's another thing that we want to look at. The next thing we want to look at is your personal tax situation. How is this going to affect you personally? Do you have a bunch of personal income outside of the business that we need to offset? If we sold a bunch of stocks at a gain, or if we did something there, or you sold a house, or whatever it may be, maybe we do need to go ahead and offset with special or bonus depreciation. However, if we are dealing with a situation of, no, we don't really have any personal tax reasons, it would be less advantageous. And the final thing we have to consider is basis within the company. Now, this doesn't matter for your Schedule Cs or your single member LLCs. Those don't really matter at all there. But for your partnerships and your S corporations, it does matter. Because with an S corporation, you can't claim a loss personally if you don't have enough basis in the company in the first place. Same thing with a partnership. If you don't have basis in the company, you can't claim that loss. Now, that basis is either prior year proceeds, your retained earnings and how much you've left with the company. That's after you've taken your owner's draws and everything like that is your retained earnings. So we've got to look at that, and or money that you've invested in the company. So if you're a startup and you've invested $500,000 to set this up, you've got $500,000 of losses that you could take. But if you've only invested $10,000 and you've financed everything else, we can special depreciate that vehicle all day long, but you're only going to be allowed to take $10,000 in losses. So is that the smart thing to do? Because those other losses, those are going to carry forward for future years to offset profits in the first place. Which, I mean, at the same point, depreciation's doing the same thing. But is it really advantageous? Isn't it really smart for you to do that? So that's another thing that we really have to look at before considering special depreciation is not, oh, let's just take this, let's depreciate it, but do you have the basis within your company to take it? On that same note with basis, how much money have you drawn out of the company? As I kind of said, retained earnings is the profits over the years that you've had with the company after you have taken distributions or taken anything out for the owners. If you took $100,000 of depreciation and only had $120,000 of basis, you only have $20,000 of basis now because that reduces your retained earnings by $100,000. So if we're trying to fully depreciate this vehicle to avoid taxation on that $120,000, it's not going to happen because the vehicle is only going to allow you to reduce by $20,000. You're still going to recognize $100,000 of profit because you drew that out of the company. So special depreciation is a great asset to use, but it's not a carte blanche, just use this. Oh, I heard this online. I heard this on social media. I can buy this. I can fully write it off. There's multiple different steps we have to look at. We've got to look at the long-term business planning and asset strategy of your business. We've got to look at your basis within the business. We've got to look at your draws from the business so that we can determine whether it is smart for you to take this or not, or whether you are just throwing a drop in a bucket and it's going to come up and not give you anything or not give you what you think that it's going to give you. If you need more help understanding special depreciation or bonus depreciation or want to see if it is a right fit for you, we're happy to help you out here and understand that. You can give us a call at 864-351-0852 or shoot us an email at info@waterfordbusiness.com. You're also more than welcome to follow us here on YouTube. It costs nothing. We love providing free information to you just like this every single Monday. So go ahead, like this video, share it to anyone you think can use this information. It really helps with engagement. And then subscribe to our channel to get more videos like this every single week.